Hey, what's up, guys? Good morning and happy Monday. Do a quick sound check here on YouTube and the free room. But as always, good to see you guys. Hope you had a good weekend. And we shall jump in here. It's a little bit of a flush into the open. Nothing that I think spoils the fun for the bulls. But let's see. NQ futures down about 0.8. The S&P futures down. Really not that much. We will call that flat. See, the small caps are a little bit green. And the Dow Jones is a little bit green. So if anything, it feels more like a little bit of a personal attack against the tech stocks. But a bigger picture here, guys. Take a look at the cash products. First things first. As far as swing trading goes, I think there's a lot to be said for waiting for some sort of dip. Try to fight for a better entry for the swing trades. But bigger picture here. Let me go grab. Let me see. Big three. All right, so quick look at the pretty colors here. And it's pretty much perfect. Perfect for the bulls. Got a weekly buy signal, daily, 4 hour, 2 hour, 1 hour, 30 minute, 15 minute, 5 minute, 3 minute, and the 1 minute. So a lot of ammunition here for the bulls. And then to spice things up a little bit more, weekly squeeze. So your trend, your structure, all the criteria for the buy signal comes together inside of a squeeze, which can usually be a pretty good combination. Inside your weekly squeeze, there's the daily squeeze. So bigger picture, both swing trading and day trading, things are in pretty good alignment here for the bulls. So for swing trades, I think, if you can get your next rally, or your next flush rather, it might be asking for a lot. But anything down towards that daily 21 EMA probably makes for a really good swing entry. As far as day trading, one trade that we did last week, we did this in both rooms, was here on the 15-minute chart. Now you can turn these lower time frame trades into a swing trade. What I like about the lower time frames is while we're waiting for a bigger pullback, you're working a really tight risk versus reward. So I think this was Wednesday or Thursday. You had the gap up at the open, pull back to your 15-minute 21 and your 15-minute trailing stop. So now you have a level, and then you get a setup down here with your 15-minute squeeze. So we sold some puts at 40.35-ish, and we took those off the following day. So you can day trade those. You can potentially hold them overnight. I think in terms of, hey, let's put on a bigger position, 5, 10+% of our account, looking for a really big push, probably going to be ideal to wait for some sort of pullback. But yeah, guys, assuming that pullback doesn't break structure and doesn't cancel all the buy signals here, they got a pretty good shot to take it higher. The weekly chart would say so. Your daily chart would say so. And even your 1-minute chart is moving and grooving. So a couple setups here for you guys. And be mindful. They're all going to move with the market. So whether it's Tesla or Shopify, pretty much all the names are going to look at this morning. If the S&Ps fall apart, they're probably going to fall apart. If the S&Ps pull back a little bit and eventually give you a pretty good dip buy opportunity, Shopify, Tesla, Amazon, probably do the same thing. So be mindful of that. But I'm actually going to start here with Shop. So check this puppy out. Clean things up a bit. But all right, first things first. Weekly chart looks pretty good. So it had made a pretty good move back here earlier in the year. Major difference right now is you still have your weekly squeeze. Just like you did back here. But everything is more well aligned right now for a big push higher. You start your weekly squeeze back here with the indicator neutral. So it's a good setup, but it's not a great setup. It's not until that squeeze pretty much, it's not until that squeeze fires that the indicator actually goes bullish. But if you look at the behavior here, it behaves a little bit like an uptrend. Now, bigger picture, of course, this thing got clobbered. But in the short term, it's a little bit like gold. First leg to the upside. On that first push, your structure, your momentum, right, everything comes together to print that buy signal. Your first back test at the 21 holds up perfectly. So you had a good pushback here, but indicator never went bullish, and he didn't really hold the back test all that well. Right, that's not all that strong. This time around, though, right, you hold your back test, you print a brand new weekly squeeze, and again, gold is kind of like a good poster child. First leg higher, get your weekly buy signal, hold your first back test. From there, you should go on to take out the previous swing high. So for old Shop Adopt here, that suggests potentially, if anything, you could get a shot here for a push back towards 55. So good looking weekly chart there. And your daily chart looks really good as well. Brand new buy signals and a daily squeeze. So the only thing I would look for here, and we can look all we want, we might not get it, a pullback to an hourly 21. At a minimum, probably a pretty good entry. If you're going to buy it up here, I think you want to be willing to buy a little bit more if you do come down towards that 21. So we might not get the flush, but I think on a dip here, you're looking for 55 and change. So long as the pretty colors keep being pretty. So shop looks pretty good. And the next one here is, you might have heard of it, Tesla. So check the weekly chart. Now your weekly chart isn't as good as shop. But if anything, getting your first weekly close back above that 21 last week just kind of stabilizes things. Nice rally, things get a little bit sketchy. So to pop back above and hold back above your weekly 21, if anything, just kind of brings the bleeding to an end. So stabilizes the ship, so to say. Now, another name where, give me a pullback to the hourly 21, then I can work an entry. I'm not going to be in a huge rush to put on a swing trade up here. But if you do get a dip, notice how your daily squeeze, we still haven't fired long just yet. So, in other words, it might feel like, man, I missed a huge move here. And admittedly, you kind of missed a good move so far, myself included, but you still got a full gas tank here. If and when that daily squeeze fires long, all very similar to back here. Not always going to be as strong and as vertical, so to say, but the rules still apply. When that squeeze fires long, 8, 9, 10 bars of momentum usually is in the cards. So I think plenty of gas left in the tank here, but I'm going to wait for. Now as I'm looking, we're going to gap down to about $200. What do you know, guys? Right down to the hourly 21. So be careful what you ask for. So I like Tesla, and then last one here is Amazon's finally starting to join the party. A little bit late, but finally showing up a bit. So weekly chart not as good as is Shopify, but if anything, maybe a little bit better than Tesla, just because you have a weekly squeeze. Right? Always a bonus point for the weekly squeeze. But here's another one where would have liked to have bought calls back here. Do some call debit spreads, sell some put credit spreads. Always nice to catch the first push But today will be day 2 of that daily squeeze firing to the upside. So if you do get a good dip, say you're coming back towards an hourly 21, you can still have some gas left here. So things to keep an eye on, guys. And now we're getting a bit of a pop in the futures. That's the only thing. Daily chart looks a little bit cooked. However, you could have said the same thing back here. And here you are, $300 higher. But guys, that's pretty much what I got for you this morning. Actually, one more name here continues to elude me. Gold. So 0 luck as far as getting a good pullback to buy here. But this thing looks good. This thing looks really good. So big giant monthly squeeze. A good looking weekly chart. And like we talked about, you behave like an uptrend. Back here, you don't get that behavior. You push higher, you go bullish. First back test of the 21, no, they totally drop the ball. First push higher, get your weekly buy signal. Boom. All good looking stuff there. So one of these days we'll wake up. Gold will be pulling back to a 21 EMA. And then I think maybe not a bad idea for a different account of yours. I don't think this is like a short-term, you're in and you're out kind of idea. I think this is more, get a pullback, go out to, at a minimum, like December expiration, December of this year, and just buy some Delta 70 calls and sit on them. In a perfect world, your monthly squeeze gives you something like this. Like coiled up, coiled up, coiled up, and then big old rip higher. So there's a few ideas for you guys. As far as a couple key levels here, I mean, here's where it gets a little goofy in the short term. The S&Ps could pull back to, I mean, technically, at least on my indicator, we could pull back to like $4,000. And the weekly chart would still be decent. Your daily chart would still be decent. So I don't quite think we're going to do that. But things to consider. Casey, what you got? Does Bud look extended? Look. Yeah, I would say so. Now, if you ask me this question back here, when it's trading at $63.50, based on my rule of thumb, that's still extended. So extended, overbought, oversold, those are just context things. Am I going to buy some calls and, close my eyes for 2 weeks up here? It might work, but no, not really. Because now I know, we're fighting this growing probability that sometime soon we are going to come back home to that 21. But it doesn't mean you can't play it to the upside. I just think, when these things become overbought, if you got a swing trade, maybe pay yourself. I think the goal should always be for a swing trade. You build your position somewhere down here. Now, this is perfect, right? Daily squeeze, daily buy signal. So build your core position somewhere in here. Make your bigger / easier money on the first push. And then I think until it pulls all the way back down there, it's just a day trade kind of thing. Operate on your 1 hour time frame. It's like, hey, I know this thing's extended, but it's really strong. So I'm going to wake up every day. I'm going to focus on, say, nothing but a 1 hour chart. And I'm going to buy every dip to the hourly 21. Or I'm going to buy every dip into the hourly trailing stop. You buy a dip, you buy a dip. Things like that. And, for those of you in the gold room, that's going to be pretty much my advice as far as, in NVIDIA. or an AMD. Just, definitely a Microsoft or these Apples, the Googles. Now, again, for what it's worth, I've been saying that about Microsoft since like $270, and just continues to push and push and push. So, yeah, I don't want to take a big position in calls up here and then wake up the following morning to a pullback to the 21 EMA. That kind of sucks from two different perspectives. One, you're taking it on the chin, but two, at least from my point of view, now you're taking it on the chin on the very pullback you should want to look to buy. So to minimize that quote unquote risk, I'm going to work off of a 15-minute chart. I'm going to wake up with a fresh slate, and every dip to the 15-minute trailing stop, I'm just going to sell put credit spreads. Right? Milk it, milk it, milk it. But if you can go to bed in cash, yeah, pretty nice, right? So that's how I'm seeing it as far as a lot of these names right now. And then if you're thinking of shorting something like that, whether it be a Microsoft or a Bud, that can always be a little bit tricky. Because you're extended at $63, and then here's 64, 65, 66. So what I would anchor to would be the hourly chart. Like you'll notice all these dips where it might feel like, okay, here comes the big short. They're just pullbacks in an hourly uptrend. Dip to the 21, dip to the trailing stop. They just, party keeps going. If your hourly chart can break structure, you're under the trailing stop, you're under the 21, lower time frame sell signals. If you can break your hourly uptrend, well, then it might be time to come back down to earth. So even if you have to wait until, say, $66 for the hourly chart to look like a short, risk versus reward wise, got a lot of room here. So it's one of those things where, all right, I don't want to get long up here, but I'm going to wait until I've got something to sink my teeth into as far as a short. Jace, what you got? You hit some snow? Nice move. Jeez. That's not too shabby. That's not too shabby. $1.40 to a $1.55. Got a big weekly squeeze here too. It's going to be an interesting few weeks, guys. Here's how quick things can change, which always a good lesson as a trader. Don't marry your ideas, no biases. But a few weeks ago, S&Ps are in a daily squeeze of the daily sell signal. We're under like every meaningful moving average, the 21, the 50, the 200. Your weekly squeeze was bearish. Every lower time frame was bearish. The junk bonds were looking like they're going to fall apart. And they kind of fixed it all in 3 days, really? Pretty much, yeah. Gap it up, pump it, gap it up, pump it. That'll fix some structure pretty quick. So not going to be a dull few weeks. But all right, my friends, I will cut you loose here. For those of you in the gold room, I'll see you in about 10 minutes, and we will keep the party going. But for the rest of you, I'm going to look for more of the same this week. We're in an hourly uptrend. We're in a 30-minute, 15-minute, 5-minute uptrend. You want a good entry, you want a setup, and you want some triggers. So I'm looking for more trades like our 15-minute trade last week. Pull back towards your trailing stop and your 21. All right, so now you got a level and a good risk versus reward. You get a setup, right? Something that gives you more edge, the squeeze. And then the confirmation for us here was all the lower time frame buy signals. 5-minute, 3-minute. everything starts lighting up, and that's what gives you the thrust to see that 15-minute squeeze eventually fire long. So it's kind of a matter of go through all the different time frames you focus on, and it's kind of simple. You either have a setup or you don't. So on a 15-minute chart or a weekly chart, if I'm getting long, I'm a fan of two trades. I'll get long inside of a squeeze, or I'll buy a dip to a 21 EMA in an uptrend. It's pretty much the only two trades I got. So then it's like, all right, well, do I have either of those two trades here on the daily chart? Well, we're not pulling back to a 21. And it's a little bit late for me to get long for a swing trade inside the squeeze. So nothing for me to do on the daily chart. Right? And I don't want to make up a trade. I don't want to manufacture an idea. No, I'll just wait until I got something to do. So then maybe I'll go down to a 15-minute chart. All right, well, no dip to buy just yet. No 15-minute squeeze setting up. So now if I'm really looking for something to do, okay, how about even a 3-minute chart? And if it's nothing to do, if you don't have one of your, one or two playbook trades, well, nothing to do. Nothing to do until there's something to do. TD, what about Cody's 0 day till expiration drama free? TD, what do you mean by it? I'm a fan of it, personally. No, yeah, I mean, for sure. It's just, I like that idea. Let's see. Let me take a look at the futures. S&P futures are, all right, so we're pretty much flat, which means the general statement, we're still going to be opening. We're still going to be opening pretty well above these 21 EMAs. So I like the idea. It's just a matter of, when and where do I get the opportunity to work that trade? Like, I got to see something near that 21. Then I love the idea. But these mornings can always be a little tricky when like even my 1-minute chart is going to open up like $10 above the moving average. So the good news is right now I think we got some good clarity. We have clarity, but I think we also got context. Right? The context is from a daily chart down to a 1-minute. Everything, we don't know when, but eventually everything's coming back to their 21 EMAs. So we always got to keep that in the back of our mind. That's the context. The clarity is on a weekly chart down to a 1-minute, everything says bullish. Like everything's lined up here for, even if we do dip, everything's lined up here for continuation higher. So I'm not saying we're going to get a push like this, but the criteria is met right now for something like the had back here. Right? And our goal should just be to milk it for whatever it's got until things begin to show signs of exhaustion. So good luck today, my friends. Wish you all the best of luck. For those of you in the gold room, I will catch you in a couple minutes here. Adios.